Okay, so I'm just gonna kick it off now because it's almost 2 minutes past the time. So just respecting everyone's time. So hello, everyone. Good evening if you're in Asia. Good morning if you're in the US. Thank you so much for joining PropTech's 7th Insight Series event of the year. It is great, fantastic turnout, honestly, and I am so happy to see you all could join. Just so everyone knows, this event is being recorded. So I do hope for folks who could not join us in person today, they find some time to listen to this great discussion that lies ahead of us in the next hour. My name is Akanksha Sharma. I am part of the advisory committee here at Women in PropTech. And I run our Insights event series where we invite various PropTech communities and industry partners to talk about PropTech trends in the region or industry. So for those who are attending Women in PropTech event for the first time, please check us out. And I do hope you find some common ground and consider becoming a part of our community. Without further ado, we are hosting today's event in partnership with Asia PropTech. Asia PropTech was founded in 2016 and is essentially an ecosystem, synergizing all the knowledge and forces from various startups, real estate players, and investors with the aim of co-creating ideas to enhance the PropTech community. Our topic today is the rise of special purpose acquisition companies, commonly known as SPACs, for PropTech companies in Asia. I personally know very little about SPACs right now, but from what I know, I understand they have been around for a few years, I think a few decades, right? Which raises a couple of questions in my mind. What has changed now? Why are we hearing so much about SPACs now? What business propositions do they hold for the investment communities out there, and PropTech in particular, right? So we will be touching on several of these topics today. Hold on tight. With that, I would like to introduce our event curator today, Rachel Yan. Rachel is an innovation manager at Asia PropTech and essentially the mastermind behind today's event. She went through all the efforts to select for us an excellent panel of 3 speakers today. So Rachel and Asia PropTech, thank you so much again for the partnership. We are very grateful. Rachel, I will hand it over to you in just a second so you can, really introduce the speakers and drive the discussion from this point on. But I just want to mention one thing for our audience. If you have any questions throughout the discussion, feel free to type them in the Zoom chat window and we will address them towards the end. So with that, Rachel, over to you.
Thank you, Akanksha, for your introduction. Thank you everyone for joining our SPAC for PropTech webinar, and I'm really glad to see the audience from all across the world. This is Rachel from Asia PropTech, and as mentioned by Akanksha, Asia PropTech has been dedicated to bring a wholeness into the PropTech ecosystem, which should not only consist of PropTech startups and developers or maybe managers. And therefore, I'm really glad to introduce today's speakers to you all. Coming from different sectors, we have Mr. Leo Low, founder of Asia PropTech. He will be introducing the PropTech SPAC landscape, followed by Mr. Joe Litz, partner of Brokers Global Hong Kong. She will be talking the procedure of SPACing from the legal point of view. And lastly, we have Ms. Stella Law, Executive Director of CFT Advisory and Appraisal, sharing us the valuation of target PropTech company in SPACs from a financial side. So without further ado, let's get the ball rolling. And I will now pass the stage to Leo for his presentation. Leo, please.
All right. So thank you so much, Rachel. Thank you so much, Women in PropTech. I'm so happy to have this webinar with you guys and myself, Leo Low, founder of Asia PropTech. So today, I think all you know that we're going to talk about the SPAC, especially for PropTech. First of all, let me share my screen. All right. All right. So I believe that you guys can see my screen. Am I correct?
Yes.
Okay, cool. Okay, first of all, I think you guys have heard to a certain extent about SPAC before or not. SPAC is actually is not a new thing, but it becomes quite hard, especially in these years, these 2 years, to make a fair track, I can say, for some scale up companies for being listed or to be a public company. Myself as founder of Asia PropTech, so I will go first to introduce about a very brief introduction on SPAC. I believe that the two other speakers will also go into details about the SPAC, the procedures, the legal point of view, and also how to make the valuation on the target companies for SPACing. Because of my identity, so I will talk more on the PropTech trend or SPACing trend, especially for PropTech company. So a very brief introduction, what is SPAC? As mentioned, SPAC is actually a short form for special purpose acquisition companies. So it's basically a shell company set up by investors in order to raise money through an IPO. And finally, they would get a target company to have the acquisition or a merger. So SPAC basically has no commercial operations. It's just a cash company, or AKA also known as a blank check company. So with the SPAC being listed, they have a limited time. Normally it's 2 years to complete a deal or to find a target company to have the acquisition. And as mentioned, the SPACing trend is going to be hard, although we may see some tightening regulations starting from this year. But in terms of the numbers of IPO through SPAC, I can say is a great number. A blank check company. So when SPAC applied for the IPO to raise the necessary funds for investment, generally speaking, it was not sure what the target company is. So the target company to be acquired will be identified by SPAC's management team, or what we call sponsors for the SPAC company, only after the SPAC have raised the funds through IPO. So comparing the traditional IPO things and SPAC, you can see this is the the sequence. The sequences are different. So for traditional IPO, I think for a company to grow from a startup to a scale up through several rounds of fundraising, and then normally the early investors will try to exit through putting the company to go through the flotation exercise, or what we call IPO. But for SPAC, it's just upside down. So normally the SPAC company will raise the funds through its IPO first. So as mentioned, it's a blank check company, and later on they will find a target company for the acquisition. It's a very brief comparison. You can see the differences between SPAC and traditional IPO. So for traditional IPO, it normally takes about 9 to 18 months. It's I can say it's quite long, the period. But at the same time, it can make sure the disclosure and also due diligence thoroughly carried out on the company that applying for the IPO. But for SPAC, it will be much faster. As mentioned, the acquisition normally must complete within 2 years. So it can take as fast as maybe 6 months to have the SPAC to find a target company, to find a merger. That means it makes the scale up company to get listed within maybe 6 months. So it's very fast. And but at the same time, because the due diligence works may not be carried out that in that sense. So it may have a higher risk compared with the very traditional IPO. You can see the numbers here. I believe that the upcoming speakers will tell you more about the exact numbers, but you can see that's from last year, the numbers are getting a very high increase compared with the years maybe adding up before. So why PropTech need SPAC now? First of all, I would like to say PropTech actually, this terminology has been discussed widely for the past 8 to 10 years. PropTech means any technology companies or any business model innovation that can assist or facilitate the real estate and construction operation. So throughout the value chain of a real estate and construction industry, any tech that can help or any business model innovation can help can be regarded as PropTech company. So you can imagine that PropTech, just like FinTech, Health Tech, InsurTech, that means most of the companies are quite new, and what we can classify them as the new economy companies. So they normally go through a process from maybe a one-man band, two-man company, from a startup. So maybe they start their business in a garage, and then through different stages of fundraising, pre-series A, series A, B, C, D, just like WeWork. WeWork, they tried to have their IPO exercise in about 2 years ago, but they failed. So this is a very prominent example for PropTech, and you can see the PropTech companies normally go through this kind of journey from a startup to a listed company. So nowadays, because the COVID situation, I think in the PropTech industry, there are increasing number of people talking and working keen on PropTech. Because of COVID-19, all of you should know about, say, we need to adapt to the new normal. For example, we may spend much more time working from home, and people will, we think about the office or the traditional commercial real estate usage. So SPAC basically provides a low-risk transaction and increase the certainty in this environment during or after the COVID, because it guarantees a faster track for getting funded or getting the PropTech company on the public. Besides that, just like what I mentioned, because PropTech companies normally dealing with the digital transformation throughout the value chain in the real estate and construction company operation. So pandemic-related restrictions have actually encouraged some acceleration of adoption of technology. For example, I always receive inquiries from different real estate developers in the region. They really want some technology or some solutions to help them to have their properties to be sold. Before the COVID, they will have some physical, sales center to sell their first-hand properties. But after the COVID, because of the social distancing, they need more solutions. They look for a better tech-enabled solution for them to sell the properties, for example. So increasing demand for PropTech is foreseeable, and there's a room for the growth for the PropTech companies. So we expect that the PropTech companies, they need more financing the investors in PropTech companies can expect a better exit, especially after the COVID. So PropTech is still a niche, and PropTech working with the real estate companies. Usually this sector and also construction sector, actually it needs more capital. So it's a capital intensive business models. Somehow it's asset heavy as well, although you can also see some asset light business model in the industry. But anyhow, that means all PropTech companies need investments, I can say, to make them have a better growth. So here in the table, you can see some examples for some PropTech companies listed around the world. I'm based in Hong Kong, so I put this at the very top, Mingyuan Cloud, which is probably the first PropTech company get listed in Hong Kong last year. So actually, this is an ERP solution company. They provide the SaaS, software as a service. Their clients basically are from the mainland China, the real estate developers in mainland China. So this is a very prominent example and can serve a maybe a benchmark for the valuation of a similar kind of PropTech companies. Another example you can see at the second row is Baker. Okay, unfortunately, the chairman passed away some weeks before, but this is a very successful company, I can say. And in PropTech field, we normally call this kind of business model or this kind of PropTech company as PropTech 1.0 company. They use the online and offline platform to do the transactions or try to make the transaction cost lower during the the real estate transactions. So, but just like Mingyuan Cloud, they also go for the to become a public company by the very traditional IPO process. And you can see some other examples in around the world, say in Australia that listed in and also a company listed in Germany, in France. Altogether, you can see some big names here like a Compass, which is a very is a great company. I mean, in the US market, acting as a platform, a MLS, using internet as a marketing medium for transactions, and Zero as well. So for these companies, I can say these are quite maybe probably the first batch of PropTech companies. They were founded about maybe 10 years ago, and because maybe 5 years ago, 4 years ago, SPAC was not that hard. So they still went through the IPO process to get listed. But as mentioned, in these 2 years, you can see there are many SPAC get listed starting from 2020. So here, I think we have about 3 tables showing you some examples about the SPAC company listed in the US. So it's worth mentioning the fourth one, you can say Fifth Wall Acquisition Corp. So Fifth Wall actually was, I can say they was the very first PropTech dedicated VC found in the US or even in the world. So they got a very good footprint or as they are so established in investing in PropTech. So they get a very good portfolio of about 60 or more PropTech companies in their portfolio. So they actually have different SPACs, not only this one, they have the Corp 2, Corp 3, they're still finding target companies except this one. So the target company is SmartRent. It's an automation company in PropTech. So this is, you can see the number, 347 million. I think this is a very normal number for SPAC company. Normally it ranges from maybe 200 million to 500 million for a normal SPAC. The other one I want to point out is the BioX Acquisition Corp, because it's about it's about WeWork. So WeWork, as mentioned, is it's a great company in the co-working sector. They were backed by SoftBank. Before the IPO, the valuation was reaching about 50 or 74, 47 billion US, which is a very big number. Unfortunately, they failed the IPO exercise because of different reasons. And then nowadays, they're still trying to come back to be a listed company by SPAC. So, but this time the valuation has been lowered much to just about 9 billion US dollars. Other examples I want to mention is just like the first one in this table, PropTech Acquisition Corp. They merged with a PropTech company called Porch, which is a home service platform. In the PropTech sector, I think this examples is always mentioned as well. And Open Door, which is a very great PropTech company, also get listed through SPAC. And Latch, which is a building operation system, operating system, they have the locking system, also merged it with the SPAC that's actually backed by the Tishman Speyer, the TS Innovation Acquisitions Corp. So you can see there's the really increasing numbers of PropTech companies going through this process, especially in the past 6 months to 12 months. But it's interesting that there are still many SPAC company, SPACs, actually still scouting around for the good target companies in PropTech. So these are the examples. You can see Fifth Wall, as I mentioned, they have the Corp 2, Corp 3. The CBRE Acquisition Holdings as one of the biggest real estate firms in the world. They also formed the SPAC. TS, Tishman Speyer, they also have the second SPAC coming to the market. And back to Hong Kong, I think it's quite new. I just checked the news online, and actually this piece of news just came out yesterday. So a SPAC company called Nova Vision Acquisition, they're not the SPAC now. They've just filed the SPAC application with the SEC to raise up about $50 million US. Not big, I can say, but this is closer to the minimum number normally we can find in the SPAC market. This is actually a Hong Kong-based company, and one of their target sectors is PropTech. So let's see what company they will have finally in their SPACing exercise. Nowadays, I think a SPAC is the operation or the SPACing things, most of them happening in the US. But back to Asia, Hong Kong, London, and New York are the three major capital markets in the world. So Hong Kong actually is also studying about the SPAC things, see if SPAC can be allowed or can be worked out in Hong Kong as soon as possible. So Hong Kong is exploring with this, and the stock exchange, the government is actually busy in working out some plans on SPAC because our competitor in the region, Singapore, is also very keen on this. So although we don't have the regime for SPAC yet, but the tycoons in Hong Kong, just like Richard Lee, Mr. Richard Lee, which is the son of the Hong Kong's richest man, Li Ka-shing, have already set up the SPAC. So this one, this is also a recent news about SPAC. So Mr. Richard Lee backed his SPAC. Bridgetown actually is negotiating with one of the biggest PropTech company in Singapore. That's Property Guru for the SPACing. So let's wait and see. And I mentioned about Singapore. It's quite similar. They have already launched a public consultation on SPACS, and hopefully they will also get a regime and get a framework for people doing SPAC in Singapore. So finally, some quick wrap-ups on the current SPACing scene for PropTech we can observe from the market. I think so far it's still not easy to find high quality sponsors, target companies, or investors in the PropTech SPACing exercises. One of the reasons is, I think, similar to the PropTech VC ecosystem situation some years ago. There are non-institutional sponsors, lower quality IPOs, and some inexperienced corporates on the market. But now it's better. I can say PropTech VC ecosystem is getting better after 5 years, after 7 years. As mentioned, PropTech is just it's quite new. I mean, it's being discussed or worked it out within 10 years. But I think the situation is similar when VC ecosystem becomes mature in PropTech, and we can expect maybe for SPACing, it will become mature in the future, but not now. So now I think it's still, it still takes time for consolidating some good sponsors or target companies in this field. So going interest in PropTech focused SPACs, you can see the examples. It actually tells the facts that there's a rise in PE investment in PropTech. An increasing number of PE firms will be looking for an exit in the coming years, of course, because they invested in PropTech companies some 2 or 3 years ago. Besides the traditional IPO, I think they will be much interested in SPACing. That's maybe a faster track for their exit. But however, as mentioned, even the US government, the US commissioners, they're having maybe tightening the regulations on SPACing in the near future. So let's see. But to me, I think as a guy in PropTech, I'm happy to see there are increasing number of companies that can get funded or get listed through SPAC in a faster way. But I also support the regulations to make sure higher quality PropTech companies can be SPACed. Okay, thank you. So let me pass to
Thank
Joe.
you,
Yeah.
Yeah, thank you, Leo. So just now Leo mentioned that there's a tighter regulation against SPAC. So I'm not an expert of that, but Joe is. So say no more. I'll pass the mic to Joe, and she will be speaking on behalf of the legislation side. Thank you.
Thank you, Rachel, and thank you, Leo. I would say Leo has provided a very excellent overview of the PropTech IPOs, the SPAC landscapes in Hong Kong and Singapore. So I haven't had much to say except for some very dry technical parts, but they are important. And as a lawyer, I think especially a lot of the audience here, they're business people. So I think just to remind everyone about the risk and the compliance side of things to make sure everything is all right before you make big money. Then I will have a very short session on the technical aspects of SPACs. My name is Joe Litt. I am a corporate partner of Walkers. Walkers is an offshore law firm. It is one of the biggest offshore law firms in the world and one of the, I would say, the top 2 Cayman law firms globally. And I am based in Hong Kong. My specialty is capital market. So I've been successfully completed more than 100 traditional IPOs in Hong Kong and the US since year 2007 as offshore counsel. So I advise on Cayman Islands, BVI, and Bermuda law. And one of my exposure to property industry is obviously listing of the companies which are in the real estate sector, including Evergrande, China Evergrande Group. The more recent one is more like a PropTech one is ESR Cayman Limited, in year 2019. And I also completed one of the Asia SPACs. So my most recent completed SPAC is the listing of the Dodo Street Acquisition Corp for a Hong Kong-based sponsor, Meso Capital. So without further ado, hold on a second. Let me share my slide. My apologies for that. Hold on.
Are you not able to share, Joe?
Hold on a second. I need to. Yeah, I have some problem with that. Hold on a second, please. So can you see it now?
Yes.
Yes, that's great. Thank you very much. So Leo has just gone through some of the differences between a traditional SPAC, a traditional IPO, and a SPAC. So basically, SPAC is a blank check company with no operation, whereas for a traditional IPO, you need to start to grow a business and grow it to a scale that it determines that it has the resources and structures so that it is ready for IPO. A SPAC needs to have quite a specific capital structure in order to facilitate the key aspects of the capital raise and business combination, which Leo has mentioned in the earlier session. So generally, a SPAC is formed by an experienced management team or the sponsor with a nominal invested capital, typically translating to about 20% of the interest in a SPAC. And we usually refer to this capital as the founder shares. And the remaining 80% of the interest will be held by the public shareholders through units offered in an IPO of a SPAC shares. Each unit consists of a share of the common stock and a fraction of the warrant. Sometimes it will be half a warrant or 1/3 of a warrant. The founder shares and the public shares generally have similar voting rights, with the exception that the founder shares usually have the sole right to elect SPACs directors. Leo just mentioned that most SPACs listing happens in the US, but in fact, there are some SPACs listed in the European Stock Exchange, like in Amsterdam as well. So we do see that in the pipeline. And the reason why I'm involved is even though most of the SPACs, they are using Delaware companies or other US legal entities, some of the SPACs, including the one that I've just completed, is using a Cayman entity. So in fact, there's no US legal restrictions on where the jurisdiction those SPACs are incorporated in. And the reason why the sponsors in Asia, sometimes they may prefer non-US, particularly Cayman companies as the SPAC vehicles, is for tax reasons. And also when they have the target, which is not a US company, and if they use a Cayman company to be the SPAC, it is easier to consider a business combination, which I will talk about more in details later. And the warrants holders will not have any voting rights because they're only holding warrants, and usually only the whole warrant will be exercisable. So if you invest in the SPAC at the IPO stage, hold on a second, my apologies that it is not in the whole slide. My apologies for that. Yeah, so it's much better now. If you invest in a SPAC at the IPO stage, you're relying on the management team that forms the SPAC, often referred to the sponsor, to look for and combine with an operating company. And that acquisition or combination process is known as the initial business combination. A SPAC may identify its IPO prospectus a specific industry or business, just like property or PropTech, that it would target at its seeks to combine with an operating company, but it is not obliged to pursue a target in that identified industry. Once the SPAC has identified an initial business combination opportunity, its management will negotiate with the operating company. And if it is approved by the SPAC shareholders, and the SPAC will execute the business combination. This transaction is often structured as a reverse merger, in which the operating company merges with and into the SPAC or a subsidiary of a SPAC. While there are various ways to structure the initial business combination, the combined company following the transaction is a publicly traded company, and it carries on the target operating company's business. For assessing whether a property investment is worthy, we often think about location, location, and location. But for SPACs, the key to ultimate economic success is probably valuation, valuation, and valuation. And in evaluating the value of an investment in a SPAC, there are a number of factors to consider. For example, the probability of the successful business combination, the time of acquisition, post-transaction volatility, share price, warrant price, and etc. So let us look at the valuation at each stage in the SPAC life cycle. First of all, the IPO stage. So you can see the first dollar sign there. So it is important to review the business background of the SPAC management and its sponsors. Just like Leo said, for example, if the sponsor is backed by some prominent business like figure like Mr. Richard Lee or some, for example, like the first PE sponsor who brought the SPAC to Asia is Anthony Leung, and he's another very prominent banker and also an ex-government officer in Hong Kong. So these prominent business people would definitely have an influence on how popular the SPAC listing would be. So most of the information about the background of the SPAC management and the sponsor will be set out in its prospectus. And also the periodic and current reports in, if it is listed in US, the SEC AdGov database. And typically the SPAC IPO process, less the process used for certain fees and expenses, will be held in a trust account. Very similar to an escrow arrangement when you buy a house. The money is held by a third party until the transaction is consummated. As investors, you should review the IPO prospectus to understand the terms of the trust account, including the redemption rights and also the circumstances in which the cash may be released from the account. So the second dollar sign is the IPO one, so the trading price. In the IPO, SPACs are typically priced at a nominal amount of US dollars, $10 per unit. Unlike a traditional IPO of an operating company, of course, the SPAC IPO price is not based on a valuation of an existing business. So when the units, common stock or warrants begin trading, the market prices may fluctuate, and these fluctuations may bear very little relationship to the ultimate economic success of the SPAC. Warrants. The SPAC unit will trade for some time after the IPO. Sometime after the IPO, the SPAC common stock and warrants may begin trading on the exchange separately with their own unit trading symbols. Very often, the SPAC will file a current report in the Form 8K and issue a press release letting the investors know when separate trading may commence. Investors who purchase SPACs securities after the IPO on the open market should be aware of whether they are purchasing units, the common stocks, or the warrants. The terms of the warrants may vary greatly across different SPACs, and it is important to understand the terms when you invest. Terms of the warrants can include how many shares the investment has the right to purchase, the price at which and period during which the shares may be purchased, the circumstances under which the SPAC may be able to redeem the warrants, and when the warrants will expire. So that is quite scary. So knowing when your warrants can be redeemed and whether they are being redeemed can be a difference between a worthwhile or a worthless investment. So if the investor misses the notice of redemption and fails to exercise within the given period, the warrants can become essentially worthless. So in April this year, the US SEC issued the staff statement on accounting and reporting considerations for warrants issued by SPAC. The focus of that statement was to highlight potential accounting implications of terms contained within many SPAC warrant agreements and to provide guidance on what to consider when making determination between classifying the warrants as equity versus classifying them as a liability. So in general, when an investor invests in SPACs, they should consult the advisors to assist you with the analysis of the warrants as a careful review of the warrant agreement, which will be vital in reaching the proper valuation conclusions. The last dollar sign, the third and the fourth dollar signs I put here refers to the business combination stage. Once the SPAC has identified an initial business combination opportunity, the shareholders of the SPAC will have the opportunity to redeem the shares and also vote on the initial business combination transaction. So that is when they find, for example, like WeWork, they are identified by the SPAC and they will try to strike a deal. So if the SPAC requires additional funds to complete a merger, so sometimes the initial IPO process is not enough, then it may also issue debt or issue additional shares. Very often that will be preference shares in a private investment in public equity or PIPE transaction. So it is important investor consideration as the SPAC changes from essentially a trust account into an operating company at this stage. So as an investor, depending on how you view the prospective initial business combination and its valuation, then you can decide whether you want to redeem your shares or remain an investor in the combined company going forward. That's the exciting part. And I'll pass the mic to the expert in valuations, Stella, and to talk about the valuation of the PropTech companies in SPACs. Stella.
Thank you, Joe. Yeah, as mentioned, like valuation is more important for the SPAC company. So yeah, I'll pass the stage to Stella. Stella, please.
Thank you, Rachel, for the introduction. So let me share my screen first. And yeah, let me have a quick introduction of myself. Yeah, my name is Stella. I'm the Executive Director of CHFT Advisory Appraisal Limited. And I'm also an accredited senior appraiser of the American Society of Appraiser and also at the panel assessor, as well as the member of the Royal Institute of Chartered Surveying and focusing on the business and intangible assets valuation. So I have been doing valuation for over 15 years and have been doing through IPOs, most likely, and merger and acquisitions. And recently, I've been doing some targets that is business combined or acquired by a SPAC in the US as well. And also, yeah, and also if you can, you know, they may be interested to go through the IPO through SPAC or the traditional IPO as well. So this is what we are going to share with you, some of my experience in doing the valuation of the companies in the PropTech in the PropTech industry. So as Leo has already and Joe has already did a very good introduction on what is SPAC, so I will not go through this. And the most important thing in SPAC valuation is that you have to know the valuation of what you are going to acquire during the SPAC IPO. So there are three very common valuation methodologies, including the market approach, the income approach, and the cost approach. For PropTech companies, it is quite tricky, I would say, because sometimes we will use a hybrid mode of the valuation. So Let me introduce you some of the basic knowledge on these three very basic approaches to valuation first, and I will explain how to apply these methodologies to the PropTech companies that to be acquired by a SPAC or by a normal M&A as well. So in the market approach, we will use the guideline companies, which is we always call the comparables. So we will make use to compare this to the value with the comparable companies. So we need to locate some companies from the financial market, which we will adopt some pricing multiples such as PE, PB, EV to EBITDA. And for some very new economy, we may use some very useful ratios, such as the value to number of users, number to or price to the area to be managed. If we are valuing a property management companies. So this is what we do in market approach. For the income approach, we usually will have we'll use the discounted cash flow method. We will use a forecast on the cash flow or the free cash flow likely on the subject companies. And then we will make the adjustment on some key terms and some assumptions as well for the growth of some very key financials, such as the revenue, the cost, etc. Finally, we will use the cost approach. Cost approach is we also named as approach, which considers the cost to reproduce or to replace in the condition of the asset and liabilities to the subjects appraised in accordance with the current market prices for similar assets and liabilities. So these are three basic methodologies that we will adopt. So for the market approach, we will likely using the pricing multiple method. So as I have said, we have to locate some financial information, the reliable one, and comparatively to the subject. So in PropTech company, usually we can find some similar companies with similar business model, and we can find some public informations on those financial information. Then we can use this method to find as comparable companies, and we will use also some other key statistics and ratios to select. Sometimes we will choose the size, the profitability, the growth profile, the return on investment, etc. But for this method, we have to find some apple-to-apple comparables. So if the business model of that company is very unique, this method may not be very useful. And for some new economy, such as some platform related or some user related, as long as there is a number of users that is very substantially extended, so heavily rely on the number of user, we can use a value called the ratio called price to number of user. LinkedIn, Facebook, we all use these kinds of ratios as one of the bases of our valuation. So, but in this approach, one of the defaults that sometimes the investor may not be using is that the company is in a very seed stage. So if it is really a startup, we don't have any reliable historical financial information, then this method may not be providing any useful conclusion on the value. So in these circumstances, we will likely use the income approach. That is the discounted cash flow method that I have mentioned. So we have to study the target to project the free cash flows and determine the discount rate. Usually we call it a weighted average cost of capital, and determine the value and determine the valuation. So for PropTech companies, most likely the value comes from the intangible assets. So likely if you see a financial information of any companies is intrinsically generated intangible asset, it's not reflected in the current financial report. So this is always the key driver of the revenue, especially for the future revenue. So all the revenue is generated from the intangible assets of that company. Usually, especially for a PropTech company, it will come from the know-how, that is the patent or the technology itself, such as some blockchain or some cloud company, usually they will have very special tech. It's the AI company, especially, or the robotic companies. So they are especially heavily on the patent. So the value of these kinds of company mainly comes from how you can market and make revenue using all these kinds of technology. People always have a false interpretation on some company. They may have some very very good technology themselves, but they cannot make money about that. So usually, from my experience, usually for company with very high valuation may not have very unique technology or patent. Sometimes they are doing marketing better than the technology itself, except Tesla, of course. Yeah, Tesla is a very unique company, but most likely the value of the company comes from the patent itself, the technology itself, and also comes from your business plan, how you market and make money, turn those technology to the revenue. So the ability to turn these kinds of technology to market, to revenue, to real revenue, to true value, to cash flows is another know-how. Sometimes we will use trademark, sometimes we will use brand name, sometimes we will use customer relationship, sometimes we will use the know-how of the key companies. For the SPAC valuation, my observation is that usually the value of the company is not coming solely from the intangible asset, but come from the goodwill. In the accounting concept, there is a concept called purchase price allocation. So if you purchase a company, say using $10, you may be buying a half of the money goes to intangible asset, but the half of the money, the $5, goes to goodwill. So a goodwill is the concept is that after the acquisition, after the business combination, how you run the business and synergize with the know-how of your investor or your shareholder of the new board of directors to run the business, it is the key drive of the value as long as you do the business combination. So always remember there is an item called goodwill in when you consider the acquisition price or the business combination price that you are going to pay. So this is usually people will neglect it. So another very important concept for SPAC in the valuation aspect is SPAC warrants. So you will see a SPAC IPO is often structured to offer investors a unit of securities consisting of not just common stock, but a warrants. The warrants can be either public warrants or private replacements. During an IPO, a SPAC will typically issue units to investors as a $10 per unit, and each unit consists one common shares and one warrant of a fraction of such warrant to purchase another common shares and an exercise price of say $11.5. So this is what we call public warrants or Class A warrants, and it is typically cannot be exercised until a business combination event or at least 12 months after the SPACS IPO. So the key terms of the warrants will have some exercise contingencies, the settlement provisions, the tender offer provisions, the timing and the redemption provisions. So in accounting aspects, these warrants has great impact on the financial report. They sometimes be classified as equity, sometimes as an asset, or sometimes of a liability. In the historically speaking, they will classify as an equity. But the SEC has recently published some guidelines on the classification of the warrants of the SPAC. So they may not just always classified as warrants. Sometimes under ASC 480, they may classify as a liabilities. If they are classified as a liabilities, you will need to update the valuation every quarter instead of just the initial issuance. So this may have a very great impact on the financial statement because each fair value change will have a direct impact to the P&L. So the valuation method will be very crucial. And I would say the share price of the underlying of all these warrants from the time being, it's very volatile during the life of the SPAC. So we need to very carefully value the warrants. So to see that if there is any impact on the financial statement or good or bad impacts. So there are two common valuation methods that I can suggest. the valuation method itself is not any magic. You can just simply Google the one called Black-Scholes models. Black-Scholes models, you can find the calculator, online option calculators from the Google, and you can just simply type in some inputs such as the share price, the strike price, the estimated volatility, the time to merge, time from assumed merger day until the warrant expiration, and risk-free rate, etc. And all you can see, and you just get the result of the option valuation. And for the public warrants, because there is always some call or put redemption features, so this will make it a little bit complicated. There are two common methodologies, which is a bit complicated, and I will not go through the details today, but you can easily Google it from the Wikipedia as well. One is called Monte Carlo simulation, the other is called binomial tree. So you can incorporate some very special features, such as the call, put, and redemption features for the public warrants in these circumstances. So these are the common methodologies on the warrants, and be aware, always aware, these warrants can have very great accounting impact, and it will have a great impact on the whole SPAC valuation. So this is what I would like to share. And for the PropTech deal, I think Leo has already have very good and very comprehensive research on some recent PropTech deal in SPAC. So including the Grab, including Li Ka-shing's and also his son's SPAC. Adrian Zhang in Hong Kong, one of the tycoon, also have raised some SPAC in Hong Kong. So this comes to the end of my presentation. I hope you have some takeaway. So let's go to the Q&A, and I pass the mic to Rachel. Thank you, Rachel.
Thank you, Stella, for your presentation. So after hearing a free presentation on PropTech SPAC, I believe your audience will have a lot of questions that would like to ask our speakers. So for now, please feel free to raise your question or raise your hand to ask verbally, or you can text it out too. So while we are waiting for some question to pop, I do have some few questions for the three of the speaker to start off. So after hearing all three of the presentation, I was wondering, how is the SPAC market on PropTech versus other vertical of the new economy companies, like for example, fintech, food tech, or even health tech? Like, what's so special about PropTech SPACs? And maybe perhaps you can also talk about what does the rise of SPAC mean for the Asia PropTech sector? So while we are waiting for the question, perhaps the speaker can have a small discussion on such topic.
So Rachel, there is one question from our audience actually, and the question is from Manjusha Pingali from Brigade Reap from India, and her question is, sometimes SPAC companies do not reveal the target company. How is the valuation done in these cases, since we know nothing about the target company?
Let me answer. Yeah, from the SPAC, as per my understanding, before it is formation, you do not know what you are going to acquire before the SPAC is formed. You just may have a theme or a direction on that. So you don't need to have the SPAC valuation before any acquisition. It is a blank check company. It is a blank company, in fact. So it's just a cash company, so no valuation is needed. So when the valuation is needed is that when the SPAC identify any target company to acquire, you need to do the valuation when you acquire that target company. So you will have a very clear picture what you are going to value, what you are going to target, what you are going to have that valuation. So you have the not before the SPAC valuation is formed, but you do the valuation after the SPAC, identify a target. So this is when the valuation is done. So you will have a clear picture what you are valuing.
Yeah, I want to add one point, because I think in practical, as I know, some sponsors are arranging the SPACing exercises. Although Stella mentioned they do not have the target company during the time for the SPAC IPO, but can I say, practically speaking, actually they have some target companies in their mind, because I just, from hearsay, maybe Joe can also add, tell us your observations. To me, I think some sponsors actually they have located or they have identified maybe 2 to 3 potential target companies. Is that the situation?
Usually the SPAC, when they go shop, they don't only talk to one target. So they will usually go at least to 2 or 3 targets. And I would say that will be the time when the SPAC sponsor will do due diligence on the target. Of course, then that means that the valuation is quite important. Because for them, they will weigh against whether or not they can, the value of the existing business and the prospect after the combination. But yes, it is very often that they don't only target one. I say that, for example, like I have one case, the client is an Indian SPAC. I'm acting for it in the merger. So they are looking at the targets. They look at different companies in India. And they negotiate with them. So I say yes, and at that point, due diligence is a very key stage. Before they even, of course, they when you see that in the public news, they have already kind of strike a deal already. So, but before that, everything has to be kept confidential.
Okay, thank you, Joe.
Okay, so thank you so much. I know we are at time. We have one more question if we can quickly answer before calling it wraps. This is from Simon Kong, and he's asked, generally, will listing through SPAC be more costly than doing an IPO?
Maybe I can have a go on it. I must say, doing a SPAC listing is kind of a cookie cutter from a technical perspective. So the fees are quite controllable because you don't need to, I would say that because yes, you do need to line up the iBank. You will have to get the accountants, the lawyers, and also share registrar. But because you don't really spend a lot of time to do the diligence on the existing operating business to start with. So you basically, the blank check company, if you look at the prospectus, they are very similar. And also the process of having a SPAC listing is very similar. When they set up the SPAC vehicles, the structure also, for example, like the share rights, they're all very similar. So very little deviation, which means that there's economy of size. Whereas for a traditional IPO, it really depends on how complex the business is, especially for PropTech. You will have a mixture of properties like real estate, like brick and mortar, and also the tech part, the AI part, and so I would say that makes things much more complicated. And also because you also need to deal with the regulatory side of things. And sometimes maybe you need to deal with the antitrust approval. So that makes things much more complicated. Whereas for a SPAC, you list it first and then you get the money and you spend it later. So I would say that is the reason why it is so appealing to a lot of PE sponsors. Because they feel more comfortable instead of, I would say, compared to the traditional, what we call the serious financing. So they invest in an operating company, hope that it will grow. So I would say for them, they would say that, okay, they try that. Yes, they make a profit, but they just feel that sometimes they can be things can go out of control. For example, if they fall out with the founders, they don't listen to them. And then the investment will be kind of become worthless. Whereas if you do the SPAC first and then you go shop, so you can, from the PE sponsor's perspective, it is more predictable. So Stella, do you have any other views on this?
Yes. Yeah, I think one of the examples is WeWork, right? Yeah, their IPOs has failed. Somehow it's also due to the reason that the management team, the founder got some problem, right, during the serious financing stage. but probably maybe SPACing would be straightforward. And regarding the cost, I think we cannot ignore the time cost as well, because for most of the from the target company point of view, if they go through the IPO process, as mentioned, I think it takes normally over 9 to 12 months. And if something goes wrong, they may need to pay extra fee to all the professional parties to make sure the flotation exercise can be done maybe in the next years. So yeah, time cost is also a cost. Yeah.
Great. Thank you so much for that, Leo. We have a couple more questions, but I think we're at time. So I suggest for people who have questions, you can, maybe consider reaching out to the speakers directly, just trying to, give everyone their time of the day back. I know it's kind of late in Asia. So with that, I really would like to thank everybody today for joining us. Leo, Stella, Joe, thank you so much for taking the time to speak with us. Rachel, thank you so much for all your efforts. It was a pleasure having you here. It was an informative event. Rachel, any parting thoughts from your end?
Yeah, I mean, thank you so much for joining us, for the speaker and sharing like the expertise. Yeah, I see a lot of questions, but we are going to share takeaway after the event and with the recording maybe. So you guys are feel free to reach out to any of the speakers and to ask more questions. Thank you so much.
Thank you
Thank
so much
you.
again.
Thank
Have
you very much.
a great day and
Yeah.
have a good night. Take care.
Thanks
You too.
all.
Thank
you,
you.
Joe. Thank you, Stella. Thanks.